Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday, so you're going to get your weekly Manhattan market update, John. Let's get right to it. We spent the entire week regenerating all of the charts for supply. Okay, this is now the updated methodology for supply. This is no longer, Johnny, actively updated supply. Okay, that's the old UrbanDigs, where we used to look, and if it was 30 days or more without an update, we kicked you out of supply because you weren't fresh. We had to kick that up to a year to adapt to what's going on in the industry right now. So this is new updated supply. It has a lot more listings in it, Johnny. 7,262. Show me that chart.
It is. I like the old way, but we just don't have access to that because the data doesn't come that way anymore. So let's talk about overall supply. 72.62. That's actually down almost 2% from the week before. But you can look at this trend. I mean, the trend in supply is generally overall supply has been rising since the beginning of the year. And it looks like it crested, right? Early June, and now we're kind of going sideways. And you know what? We're going down a little bit here. Sellers aren't really eager to be listing right now, and I'm not surprised about that.
Yeah, we've been talking about the fact that the inventory is not really going up anymore. It's kind of reversing and it's going down. And I think this is a seasonal thing. This is like a normal seasonal pattern. And you would think with the market shifting with the macro and rates, you would think that the normal seasonal pattern gets put aside and different things happen and inventory would rise and buyers would get more options. And that is not what's going on over here. As you said, this market's unique like that. Johnny, let's move over to pending sales, measure of demand. We did tweak that as well. That used to look 6 months and look at contracts in 6 months. And if you're over that 6 month, we would kick you out. Now we go 9 months. We do that because we found some legitimate contract signed that were still pending in months 6, 7, and 8. So we did that. 4,015, Johnny, show me that chart.
Yeah, and that's and really the slope of this chart has not changed that much. I mean, yes, we found some more stuff, but overall context, the chart is more or less the same. But it's interesting though, because we've seen pending sales rise here for the last couple of weeks, and it's really not something you would have expected here in the middle of summer. And it could have to do with ACRA slowing down. It could have something to do with like maybe there's a little bit more action in the markets. But either way, pending sales is not really taking the dip that a lot of people would expect.
Yeah, that's true. That's true. It's not, and I think it will. I think it will as time goes on. And I talked about this with engineering. We check this every which way to make sure the numbers are right. And sure enough, the numbers are as it is. So it's probably a function of either accurate sales that are slowing, and that's not dragging those pending sales out of pending as quickly as it used to, or it could just be the back end of the pipe 9 months ago, the stuff that's going out. There's a little more stuff going out, and there's less stuff going out, more stuff coming in the front, and that's causing a little bit of a change. It could be either of those two things. I know it's kind of complicated. We don't like to talk about that, but it is what it is. Let's move on to the weeklies, John, because the weeklies are not affected by any of these chart updates we did. The weeklies are pure. They're good. Let's take a look at supply. 238 things. That's ticking down. Show me that chart.
Right, and if you're going to pay attention to anything, I'd be paying attention to the weeklies. This is far more the real-time action on the market here. And you're looking at these weeklies. This is the lowest weekly number we've had really this year. I mean, I'm excluding the very first week of the year, but 238 things hit the market, Noah. That's pretty quiet.
Yeah, that's not a lot. That's not a lot. I realize that's not a lot when I look right below it and I see 200 things signed in the contract, and usually supply is much higher than what's going on in contract signed. Johnny, let's take a look at that contract sign of 200. That's a tick up from last week, where it was actually lower. Show me that chart.
Yeah, it is a tick up, and it's interesting to watch here because a lot of folks would have thought that we were actually kind of one of the things we were watching was contract signs sort of falling in combination with supply, and now here we see supply sort of at its nadir for the year, and contract signs kind of tick back up. It's just more certainty, more confirmation, I should say, that this market is really, it's not dead, it's not crashing, it's simply back to normal for the summer, Noah.
Yeah, and you know what? I'm going to actually go on a limb and say this market is starting to potentially find its way a little bit. All right. It's kind of like stabilizing after an adjustment reset to wherever it was going. And, I'm hearing some activity anecdotally from agents that I speak to, and they're telling me, you know what, I'm getting some activity. I'm getting some bids. So, 200 deals a month in July is not so terrible. It's kind of more seasonal. It's just a relative slowdown, as you talked about often. And with inventory going down, that's having a muting effect on this market. So it doesn't feel like this market is falling if supply is falling with demand. So just like you said, interesting stuff here. Let's go take a look at the chart du jour, Johnny. Let's go take a look at sell side. And the only measure that we could track is price reductions. And what are sellers thinking? How many price reductions? How many listings had a price reduction this month, last month, et cetera, et cetera. And Johnny, when I look at this chart, and I look at what happened a month ago in June, we just fell off a cliff in terms of price reductions, right? So that I don't think sellers are just rushing to lower their price. And the median looks like it's about 4.5% or so, John.
Yet not only that, but the median price cut, right? That orange line has
Yep.
come down too. So that not only the
Yep.
number of cuts down, but the amount of the cut has lowered. And again, I think this is again more confirmation that we're not seeing a crash in the market. We're not seeing, panic on the part of sellers to sort of move things as fast as they can, because otherwise this number would be higher. You would see some panic here. This is anything but panic. This is people out for the summer. And I do expect this number to start ticking back up as we enter the fall. I think that's a natural thing. But again, look at that. Look at this historical pattern. Summer is slow, and it's slow for price cuts. It's slow for listings. It's slow for deal volume. It's summer. You'd expect to see summer data numbers here.
Yeah, and this is summer data numbers, and I'm actually highlighting here 2019 and 2021. I'm skipping 2020 for obvious reasons. But you could see how July and August falls. July and August falls in terms of price reduction here, and that's exactly what you're seeing here. So I wouldn't be surprised to see this number fall again in August. It's just not the time for mass sellers to go say, oh, this is our market, let's go lower our price and get into it. This tends to be the slower summer market. And you know what? If sellers are not getting their bid, Johnny, they're going to choose to go off market.
Yeah.
And that's just the kind of market that we have. John Walkup, thank you for pulling up all this data. Always a pleasure to see what you got going on. I am Noah Rosenblatt. We're both from UrbanDigs. If you guys got questions, we got answers. Please visit our forum right down here. If you want any of the reports that Johnny whipped up today, they'll be right over here in just a minute. Other than that, this has been your weekly Manhattan Market Update, and we'll catch you next time.